Hey everyone, welcome back to Corporate Decoder, the place where we try to find the hidden truths in all those boring corporate fillings. So get ready because today we are diving deep into Byline Bancorp latest report. So Byline Bancorp is a bank holding company and they just dropped their quarterly report at 10Q, and we are going to unpack the numbers that really matter. We will see how their business is doing and what these financial details could mean for you. Before we dive in, if you love getting these kinds of insights directly from filings, make sure you are subscribed. And hey, we have a growing community on Discord, link in the description below where we break down more of these documents. Come join us. Let's start by looking at their financial health at the end of September 2025. Their total assets reached nearly $10 billion. That is a pretty big number. Deposits are a huge part of their business, making up over $7.8 billion of their liabilities. That means people and businesses trust them with a lot of money. This is a good sign for stability. Now dig into their loans and leases. They have over $7.3 billion in net loans and leases. This is what banks do. They lend money and make money on the interest. This number went up by more than $500 million since the end of 2024, showing they are active in lending. On the flip side, the allowance for credit losses, which is money set aside for loans that might not get paid back, also went up. This usually means they are being cautious, which is smart. Here is a super important number for any bank, the net interest income. This is basically the difference between the interest they earn on loans and investments, and what they have to pay out on deposits and other borrowings. For the first 9 months of 2025, this number jumped to over $284 million. That is a solid increase from the same time the year before. This tells us they are earning more on their assets than they are paying out on their liabilities. They also make money from other sources besides just interest. This so-called non-interest income, which includes things like fees on accounts and loan servicing revenue, brought in over $45 million for the first 9 months of 2025. This is a good chunk of change and shows they have diverse income streams. But running a bank costs money. Their salaries and employee benefits alone were over $111 million for the first 9 months of 2025. This is a big expense, but also shows they employ a lot of people. Other expenses like data processing and legal fees add up too. The provision for credit losses, remember that money set aside for bad loans was over $26 million for the first 9 months of 2025. Even though it is higher than the previous year, which could be a cause for concern, it might also just reflect their cautious approach to lending amidst economic uncertainty. So after all the income and all the expenses, Byline Bancorp reported a net income of almost $96 million for the first 9 months of 2025. That is up from around $90 million the year before. Their earnings per share for the 9 months were $2.14, which is a healthy number. Let's look at their capital strength. Their tangible common equity to tangible assets ratio was almost 11% at the end of September 2025. This basically means that for every dollar of assets they have, over 10 cents are backed by real shareholder equity after removing intangible assets like goodwill. This is a pretty good ratio. Now for a look at their loan portfolio, commercial real estate loans are a big part of their business, making up about 34% of their total loans. They have spread this out across different states and property types. It is good that they are diversified here. Industrial and warehouse properties make up the largest chunk of their commercial real estate loans. What about problem loans? Their non-performing loans and leases were less than 1% of their total loans. This is a low number and a positive sign for the health of their loan book. It shows they are managing their lending risks well. Turning to the company's stock, more than 45 million shares were outstanding at the end of September 2025. They declared a dividend of 10 cents per common share in October. This shows they are returning value to their shareholders. Looking at their adjusted diluted earnings per share, which excludes some unusual items, they reported 83 cents for the quarter. This adjusted number helps paint a clearer picture of their ongoing business performance. So what is the verdict on Byline Bancorp? They seem to be growing and managing their business well. Their deposit base is strong, their loan growth is steady, and their profits are up compared to last year. They are also in a good capital position and their asset quality metrics look solid. The acquisition of First Security Bancorp in April 2025 seems to have been integrated smoothly, contributing to their balance sheet growth. While there are always risks in banking, especially with changes in interest rates and the economy, Byline Bancorp appears to be navigating these challenges effectively. Alright, that is our breakdown of Byline Bancorp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.